Hello, traders. It's Ryan with Stock Investing and Trading 101. Today is Friday, the 13th, August 13th, and we're going to be doing a weekly trading recap. Today, we actually had a very good day trading. Our portfolio is up 2.22% today, and that's mainly from Rocket Companies. So, Rocket Companies had earnings last night after market. It caused the share price to go up 10%. I'm actually holding 200 shares and I'm selling covered calls. So the value of these covered calls went up significantly today. So I sold a call expiring in 2 weeks for about a $50 credit. And I have another covered call that's going to be expiring soon. So for my option positions, I have the two covered calls. I also have a long leap on AT&T expiring in the middle of 2022, and I also have a Campbell's Soup call expiring January of 2022. The majority of my positions are currently in stock positions. So from biggest to smallest position, biggest is at the top. Campbell's Soup is currently my biggest position. I'm actually underwater on this position. It's kind of had a really rough couple of months, down 13% in the last few months. So I'm pretty much holding, collecting dividends, selling covered calls in the meantime. We have Rocket Companies, which I'm continuing to hold, continuing to sell covered calls and cash secured puts. This is one of my go-to stocks for selling premium. First of all, it's got a high implied volatility. Second of all, I don't mind the company as a long-term hold. I like to only sell premium on companies that I don't mind holding, and Rocket is one of them. Next, we have gold. We have Amazon. We have a couple $1,000s worth of Amazon. We have Las Vegas Sands, which has been getting just beaten down. I think Sands is a little bit undervalued. I mean, it's down 20% in the last month, 30% in the last 3 months, and it's pretty much at yearly lows and multi-year lows. It's pretty much lower than some of the lows from the pandemic, so it could be undervalued. We have Caterpillar, which had a really great day yesterday. Caterpillar was up like 5 or 10%. Today it's looking a little bit weaker, but that's kind of expected after such a big move. I actually trimmed my Caterpillar position yesterday on that big pump. Next, we have Scott's Miracle-Gro. This is also a company that I think could be undervalued. It's gone negative for the year. It's down 33% for the last 3 months and 15% for the month. So it's another one of those possibly deep value stocks that could be worth buying at these levels. We have Intel at about $53 per share average cost. So pretty good average cost. Kraft Heinz, McCormick, Activision Blizzard, which has also had a rough time. I'm sure a lot of you have heard of the news about their workplace conditions being less than ideal, and so everything that's going on with that. Verizon for the dividend. Delta Airlines, one of the strongest airlines companies. MasterCard, I've been buying a decent amount of MasterCard and Visa, both relatively low technically. We have General Mills, Air Products and Chemicals. This is also a very high quality dividend growth company that could potentially be undervalued. It's gone negative for the year. It's down 8%, 5% for the last month. So this could be another one of those deep value stocks that you just buy low and you sell high, or you sell it higher. Madison Square Garden, IBM, Constellation Brands, EA, Take-Two Interactive, the gaming companies also have been pretty volatile along with Activision. We have Caesar Entertainment, General Motors, BTI. This is just a pure dividend company, British American Tobacco. We have Bud, NVIDIA, UAL, I have a little bit of hedges, so I'm using UVXY as well as VXX as hedge positions. I'm actually holding VIX calls on my Thinkorswim account as a hedge because the market is making new highs day after day, and it's getting very close to a correction in my opinion. Next, we have smaller companies. I'll just briefly go through these. Hormel, Lemonade. I have a small position in Facebook, Netflix, Microsoft, Apple, Unilever. I'm planning on adding to all my tech companies if there is a correction. So I have starter positions ready, but I plan to make these some of my biggest positions if there is a buying opportunity, which, that could take months, or it could take a couple of weeks, or it could happen any day now. But whenever that finally does happen, I'll be ready. I have plenty of cash available in buying power, and it's pretty much for the purpose of buying technology companies at a discount. We have some ConAgra brands, which has been relatively cheap. I've been trading in and out of that lately, just because it is another one of those value stocks that's been beaten down significantly. We have Starbucks, Pepsi, McDonald's, PayPal, UPS, FedEx. Both UPS and FedEx I've been buying. They've gone up a little bit since their earnings, but they were at a certain point pretty undervalued, and since then they've kind of bounced back up and had a little bit of a retracement, but they're still cheaper than they have been for the majority of the past year. We have Shake Shack, UVV, Merck, AbbVie, and the rest of these companies are less than half of 1% of my portfolio, so I'm not going to go through all of them and bore you guys to death, but that's the portfolio. That's my current positions. For the past week, we have a return of $600, 2% return for the past week, so pretty good. Not spectacular, but it's definitely acceptable. $600 for pretty much, sitting on my phone for an hour a day and managing my positions is acceptable. For the month has been kind of volatile for us. We're only up about 2.6% or about $750 this month. So we kind of needed today. Today was a really good day for the portfolio, and we kind of needed it because it brought our averages back in line. Looking at our year, for our return for the year, we're at 57% for the past year. Pretty good return. I'm happy with that. Our portfolio is at all-time highs along with the market, so we are slightly outperforming the market. Actually, I think it's kind of significantly outperforming the market on a yearly basis. Let's compare to the NASDAQ, which is probably the best performing. So the NASDAQ is up 34%. We are up 55%. And the S&P 500 is up 31%. So we are nearly doubling the performance of the major indices. So that's a great feeling. So thanks for watching the video, guys. Going into next week, I'm just holding my positions. I'm taking profits when I see fit. I have plenty of cash available. I have margin. I've deleveraged my account. So if there is a correction, the plan for me is to aggressively average into high quality companies. I'm going to buy the dip on Apple, Microsoft, Adobe, Facebook, Google, all of those good stocks, Nvidia, and more, and average to build positions so that once the correction or the dip finally does end, we can ride the wave back up and make thousands of dollars of profit with very low risk. So that's my favorite strategy, is noticing a market correction when it's happening, realizing that stocks may be becoming undervalued, aggressively buying, and from my experience, 90% of the time they bounce back, and that's when I make tons of money in a very short period of time. So this period is kind of boring to trade. Not a lot of volatility, not a lot of big swings in the market. It's pretty much just, slow and steady upward move, which is great. We're all making money, but I like the volatility. I'm sure all of us traders, volatility is pretty much our bread and butter. So thanks for watching, guys. Don't forget to smash that like button, subscribe to the channel if you haven't already, and we'll talk to you guys soon.